Good morning. There may be no prosperity at the start today on Dalal Street as the global cues are not supportive. After Spain, now Portugal has announced tough austerity steps to qualify for the funds from the massive safety net provided by the European Union and the IMF. Optimism that the Eurozone debt crisis is abating got a lift from a successful bond auction in Italy. Still, the euro fell close to 14-month lows against the dollar. Risk aversion remains elevated with the dollar index climbing above 85. Commodities are under pressure though gold continues to attract safe haven buying. US stocks erased Wednesday's big gains amid reports of a widening probe of large Wall Street banks. Asian markets are mostly trading in the red this morning. It's a no-brainer that Indian stocks too would fall in sync with the global trend. However, the fall may not be too severe and the sentiments could change for the better provided that there is no further bad news from the external front. Key indices may also benefit if inflation for April turns out to be lower than anticipated. Consensus is for a drop to approximately 9.5% from 9.9% in March. On the whole, the market is likely to remain sideways and range-bound. The NSE Nifty will continue to find resistance at around 5,200 and beyond which support is expected at 5,000 in case it drops below 5,100. A major breakdown in sentiments is not on the cards unless we get some fresh dose of bad news from the overseas market. The results to be announced today are Adani Enterprises, Asai India, Bhushan Steel, Deccan Chronicle, DLF, Federal Bank, Gulf Oil, Hindustan Copper, ICI India, Kirloskar Oil, McNally Bharat, Nalco, SBI, Tanla and Videocon Industries. FIIs were net sellers of Rs 155.7 million in the cash segment on Thursday on a provisional basis as per the figures published on the NSE website. Local institutions were net buyers of Rs 2.22 billion. In the F&O segment, the foreign funds were net buyers of Rs 18.63 billion. The government plans to raise $11 billion for the nation's infrastructure. 40% of the corpus could be raised from foreign pension, insurance and sovereign investors. Food inflation rises to 16.44% in the week ending 14th May 2010. RBI to give priority sector status to loan for projects that emit lower carbons. SEBI may close equity options route for mutual funds. In a move to bring greater transparency, banks may now have to list securitized debt. Aban Offshore loses one of its biggest money-spinning rigs, earning 15 million rupees a day. RIL may join ONGC consortium in Venezuela, which could back a hydrocarbon block. Standard Chartered is likely to raise around $600 million through an India listing. RJ Corp will dilute 10 to 12% in one of its subsidiaries to fund expansion plans. Kingfisher to restructure around 7 billion rupees of debt. REC plans to borrow 21 billion rupees as a part of its resource mobilization plan. UK's National Grid has shortlisted Infosys, Mahendra Satyam, Cognizant for $250 million outsourcing contract. Moving on to the recommendations, the derivative strategies are short Aban May future at levels of Rs 1018 to Rs 1005 for a target price of Rs 960 to Rs 940 and the stop loss is to be placed at Rs 1047, and long PFC May future at Rs 290.75 for a target price of Rs 297 and the stop loss is to be placed at Rs 287. The technical calls are a buy on emphasis. Traders are recommended to buy the stock at levels of Rs 677 to Rs 683 for an initial target of Rs 705 up to 710 rupees and a strict stop loss is to be placed at Rs 667. And a buy on Titan Industries. Traders are recommended to buy the stock at levels of Rs 2,236 for a target price of Rs 2,300 and a stop loss is to be placed at Rs 2,210. Thank you and have a great day ahead.